welcome. Today I'm going to show you how you can use the mutual fund screener provided by Yahoo in order to find mutual funds that you would like to invest in, and then I'm going to show you how you can invest in them using StockTrack. But before we begin, I'm going to talk about 3 different terms related to the cost of funds so that you understand what I'm discussing later on. We begin with the front-end load, and the front-end load is a commission that you pay when you purchase shares in a fund. And it works in a way that if you would like to invest $100,000 and they have a front-end load, then part of your initial investment is going to be paid as a commission. So, for example, if you want to invest $100,000 in a fund with a front-end load of 4.5%, then you will pay a commission of $4,500 and only $95,500 actually invested in the fund. So before you can even break even, because you invested $100,000 and now you only have $95,500 in the fund would have to increase the value of your assets by $4,500, and only after that can you make a profit. And as a fund is investing in stocks or bonds or something, the value could actually drop, so you could lose even more. So a front-end load effectively reduces the money you have invested, and you need a bit of gain in the value of the assets before you can even break even. Now, since the StockTrack game is quite short compared to if you would invest in the real life, this front-end load could have quite a huge impact. Let's say you invest when it's 2 weeks until the end of the game, then they would have to have an increase, in this case of more than 4.5% just before you break even. So the front-end load could be quite substantial as an investor in StockTrack. But there are more terms related to cost that we need to look at, and that is the total expense ratio. The total expense ratio is a ratio of the cost compared to the cost of the funds to the assets of the fund. So if I have $100,000 invested in the fund and they have an expense ratio of 1%, then each year they would have costs that would correspond to 1% of the assets in the fund. And that means that of my assets I'm going to lose 1% value each year. On the other hand, the fund could increase the value, so I would actually not notice this. But it works like this: if you have a fund asset increase by 9% during the year, and they have an expense ratio of 1.5%, then the investor would see a growth of only 7.5% during the year. So the expense ratio is reducing the gain that you get from the fund. And the front-end load was a cost that only occurred when you enter the fund. The expense ratio, on the other hand, is something that comes back year after year after year. So a high expense ratio will be worse in the long run, whereas a high front-end load is quite severe if you're going to stay in the fund only for a very short period of time. And then we have one last term, which is called the back-end load, and it works pretty much the same as the front-end load, only that this might be an exit fee that you pay if you wish to exit the fund. And as an example, if you have $200,000 invested in a fund and they have a back-end load of 3.0%, and then you want to sell your shares to get the money and invest in something else, well, then you would have to pay an exit fee of $6,000, and that means that you will not get everything out. So if you are investing in a fund in StockTrack and you believe that you at some point might want to exit the fund, then you should look if this fund also have a back-end load, because that could also affect your investment. On the other hand, if you do not actually sell your shares, you will never experience this back-end load. So when it comes to back-end load, it's usually reduced the longer you stay in the fund. So if you exit the first year, then maybe I pay 3%. If I exit the second year, maybe I only have to pay a back-end load of 2%. And after, let's say, 5 years, I might not have to pay anything at all. But it differs from fund to fund, so you would have to look at it. Okay, so let's go and look at funds then. In the course webpage, we go to course materials, then to the portfolio simulation instructions and the simulation guidelines part 1. At the end, we have the appendix with all the investment screeners. And the one I'm going to use today is the one called Mutual Fund Screener, which is a screener by Yahoo. So we click on that one, and we get here. Now, just as with stocks, we have quite a few different criteria that we could use. So, for example, maybe one of the most important when it comes to funds, is that funds invest in different assets. So it's a way to get diversification without buying different assets yourself. And here you can choose what type of investment or focus you would like to have. So, for example, it could be a US stock fund, it could be an international stock fund, it could be a bond fund, for example, or it could be a hybrid which invests partly in stocks and partly in funds. But you can also have more specific. You can have a bond with a high yield, bond with a long term, or maybe even municipal bonds given by different states in the US. And you can also decide, for example, that you would like small, in this case, stocks that are focusing on growth stocks, or they're focusing on value stocks, or something in between. Then you can choose fund families if you would like that. I'm not going to bother about that. You can also look at different rankings by 1 year performance, for example, or the 3-year return, or the 5-year return, or something like that, or risk rating and return rating. So you can choose it pretty much the way you would like it. But since I'm pretty much focused on the costs here, I'm going to look at this part, the purchasing and fees. And I'm going to say that I would not like a very high front-end load, but I'm not sure exactly what funds are out there, so at least I want to see this result. We display results for the actively screened data, so if I choose to anything on the front-end load, then I will see what the funds are charging me for front-end load. And I will choose a total expense ratio less than 2%. Again, this is just to see the expense ratio of the fund. Unfortunately, we cannot choose the back-end load here, but we can still find that out later on. Alright, so apart from that, I'm going to have one more criteria, and that is that the Morningstar rating is 3 or higher. You can read about the Morningstar rating if you would like, but it's a site that ranks funds based on how they perform compared to other in the same category. So this is based on historic performance, of course, but it could give an indication of whether this is a good or a bad fund. Okay, and furthermore, I'm going to, if possible, find a fund that invests in international stocks. That way to get the maximum diversification effects of investing in different countries. So, now I'm going to look at a mutual fund that invests in stocks, and I would like a front-end load that is below 1.20%, or actually I require that. I would like an expense ratio that is below 2%, and I would like a Morningstar rating that is 3 or higher. My preferred category is world stock, and if I can't find one that fits my above criteria, then I will choose to look at small value stocks. And once I have some to choose between, I will take the one with the lowest front-end load. Okay, so going back to here, now I've chosen the international stock funds, the Morningstar rating of 3 or less, and I see the front-end load and the expense ratio. Okay, so let's try and find any of these funds. Okay, so then we get quite a few different funds, and since I'm focused in the front-end load, and I want it to be below 1.2%, was it? Yes. And click here and see if there are any such funds. And it turns out that there aren't actually any funds that invest in world stocks or in international stocks that has a front-end load less than 1.5%. So I can't actually find any of these funds here. Alright, well, too bad. Then I will have to go on and look at the small value stocks. Okay, so we go down here and we select small value stocks, or funds that invest in small value stocks. We find funds, and again click on the front end load. I hope that there is someone here. Alright, Highmark Small Cap Value Fidelity. This fund actually has no front end load at all, and the expense ratio is in my opinion, a reasonable amount. So there's no front end load, which I believe is very good. I would like as low front end load as possible, and it has a fairly low expense ratio, and the Morningstar rating is at least 3 stars. Okay, so when you trade in StockTrack, you need symbols, and as you can see here, you can't find a symbol over here, but there is another way to find it. So if I would like to know something more about this fund, I could click on the profile, and then I get here in the parentheses, I get the symbol. So this is actually the symbol of the fund. So I click this, right click, and choose copy. Okay, here you can also get some more information about the fund. You have a fund summary, and you have a little bit of information about the management. You can also see something about the fees and expenses, and you have a box that should help you find out what type of fund this is. So this fund invests primarily in small companies compared to medium or large, and it chooses not growth companies, not blend, but value companies, at least most of it. More than that, we could also look at holdings, and the reason we would like to look at holdings is that we don't actually know if this fund is investing only in stocks or if it is stock and bonds. So we click on holdings, and we see that, okay, in 98.51% of the assets in the fund are invested in stocks, and 1.49% is invested in cash, and this is negligible. So I'm just going to ignore that and say that this is an all-out stock fund. Okay, that's good. All right. One more thing you might want to look at is if you click on risk, where you can see the alpha of the fund, you can see the beta of the fund, you can also see the Sharpe ratio and the Trainer ratio, and you might not know what this means yet when you look at this movie, but you will find out later in the course in that case, so then you could come back here and look at it. Alright, but right now I'm going to purchase this fund, so I go into Stock Track, I go to Trading and choose Mutual Funds. Now I go to the symbol and I enter the symbol here, and we get the fund, which is high market small capital. Alright, so now you can either choose, no, actually you can only choose to decide how much you would like to invest. So here you don't actually buy, let's say, 50 shares of this fund, but you choose that, okay, I would like to invest $100,000 in this fund. Okay, so I would like to invest $100,000, then I preview the order. I see that there's a small commission of 10, and the total cost would be $100,010. Alright, so I place the order, and that's it. Now I'm going to buy this fund, or I'm going to invest in it. As you can see, it says that I'm going to buy 0 units of this fund, but that only means that I'm going to invest a part of money in this case. So I add $100,000 to the fund, and then they invest that in stocks. So that's fine, it should look like this. Now I'm actually going to buy one more fund here, just to show you that the asset allocation might differ from different funds. So we go back to this screener here. I'm going to keep the same settings, except for I'm going to invest in a hybrid fund now. Okay, so I'm going to look at find funds, and then I'm going to just look at the first one. The one is called API Efficient Frontier Income. Alright, so the main point I would like to do here, I don't really care about the front-end load expense ratio now, I just want to show you how it can look later on, is that the holdings of this is mixed. So it has 49% in stocks, it has 40% in bonds, 1.31% in cash, and then 2% in something else, which could be maybe derivatives, or I don't really know exactly what they are investing in. But you can see here that this is not only a bond fund or only a stock fund, it's actually a mix of the two. So if you would like to choose a fund that has the mix for you instead of creating it yourself, then you can use one of these funds. But for now I'm just going to show you how you could write this up. Okay, so we find the symbol here again, we go to Stock Track, we write down the symbol, and we get it here. Okay, let's say I would like to invest $20,000 in this, preview the order, and I place it. Okay, so now I've invested in one stock fund and one mixed fund. Okay, now when we looked at the first fund, I would like the front-end load to be less than 1.2%. I wanted the expense ratio to be less than 2%. I wanted a Morningstar rater which was 3 or higher, and I would like the category to be world stock, but if that didn't turn out to go well, which it didn't, I choose the small value stocks. And again, this is not really for any specific reason I take these exact numbers, it's just an example. And the purchase decision was made on the lowest front-end load, and I actually managed to find a small cap fund with a front-end load of 0%. Write down the information that I used, and then now I see that I have a type that was mutual fund and the asset class were stocks. On the other hand, the other type, I didn't really have any criteria, so I just wanted to give you an example of this fund. So I took any fund with a mix of stocks and bonds. And in this case, I need some more information on the asset class, because this is not just stocks or bonds. So I'm actually writing up all the information that I had. It had 49% in stocks, 40% in bonds, 1.31% in cash, and 2% in other. Now, by now I have invested in stocks, bonds, and funds. We can find them over here. And it's quite a lot of information to look at. So I'm going to order them up in an asset list that I have here. Now I'm going to I have marked actually all the stocks in green. I marked all the bonds in yellow, and in this last example, the mixed fund, I divided it, so I've written it 4 times. So we have one part of this fund that is stocks, and then I've written down that the part of this fund that stocks is 49.16%, the part that is bond is 40.2%, the part that is cash is 1.31%, and the part that is something else is 2.04%. And I need this information later on when I'm going to make an asset allocation pie. Alright, but now we have actually purchased funds and showed how that is done. So I'm going to give you some page references to Bodekane and Marcus. So you can read about mutual funds in section 4.3, and you can read about the costs of investing in mutual funds in section 4.4. And of course, maybe other parts of chapter 4 might be interesting as well for you. Alright, so that's it for this time. I hope this helps you find the fund you would like to invest in, and see you next time.